Welcome to Business with Louis, the show where we explore the world of entrepreneurship and help you turn your ideas into reality. Today we're going to talk about capital budgeting, a crucial concept that can make or break your business. So let's dive in. Capital budgeting is the process of evaluating and selecting long-term investment projects that align with your company's goals and objectives. It's like being the captain of a ship, navigating through treacherous waters and making decisions that will determine your destination. You need to carefully consider which projects to invest in, how much to spend, and when to expect return. The concept of capital budgeting has been around for decades, but its importance has grown significantly in recent years. With the rise of globalization, technological advancements, and increasing competition, businesses need to be more strategic and efficient in their investment decisions. As the famous economist Irving Fisher once said, "The ideal rate of investment is that which equates the marginal efficiency of capital with the market rate of interest." There are several key models and frameworks that underlie this concept, including net present value, internal rate of return, and payback period analysis. NPV helps you evaluate the expected return on investment by discounting future cash flows to their present value. ER, on the other hand, calculates the rate of return on an investment based on the initial investment and expected returns. Payback period analysis estimates how long it will take for an investment to generate enough returns to cover its initial costs. These models are not just theoretical concepts. They have been widely used by successful businesses and entrepreneurs. For example, Warren Buffett, one of the most successful investors in history, uses a combination of NPV and ERR to evaluate potential investments. As he once said, "Price is what you pay. Value is what you get." Let's look at some real-world examples of capital budgeting in action. Amazon's decision to invest in drone delivery is a great example. The company evaluated the potential returns on investment, including increased efficiency, reduced costs, and improved customer satisfaction. They also considered the risks, such as regulatory hurdles, technical challenges, and public perception. By using capital budgeting techniques, Amazon was able to make an informed decision about whether to pursue this project. Another example is Coca-Cola's investment in sustainable packaging. The company recognized the growing demand for eco-friendly products and decided to invest in new packaging technologies. By evaluating the potential returns on investment, including cost savings, increased brand value, and reduced environmental impact, Coca-Cola was able to make a strategic decision that aligned with their business goals. First, start by identifying potential projects or investments that align with your goals and strategy. Then, evaluate each option using tools like NPV, IRR, or payback period analysis. Consider factors like risk, return on investment, and strategic benefits. Don't be afraid to seek advice from experts or use online resources to help you make informed decisions. One of the biggest challenges in capital budgeting is dealing with uncertainty and risk. To mitigate this, it's essential to conduct thorough market research, assess competitive landscape, and develop scenarios to anticipate potential outcomes. My experience with market cycles has taught me that even the best laid plans can go awry, but with careful planning and an analysis, you can minimize risks and maximize return. In addition to these strategies, there are several tools and methods that can help you apply capital budgeting in practice. For example, spreadsheet software like Excel or Google Sheets can be used to build financial models and calculate NPV and ERR. Online resources like Coursera or edX offer courses and tutorials on capital budgeting and investment analysis. And of course, there are many books and articles available that provide guidance on how to apply capital budgeting principles in real-world situations. Research has also shown that companies that use capital budgeting techniques tend to outperform those that don't. A study by McKinsey found that companies that prioritized investments based on their strategic alignment and potential returns tended to have higher growth rates and profitability. Another study by Harvard Business Review found that companies that used NPV and ERR models to evaluate investments had lower risk profiles and higher returns on investment. In conclusion, capital budgeting is a powerful tool for businesses and entrepreneurs to make informed investment decisions and drive growth. By understanding its core principles and applying them in practice, you can create value, manage risk, and achieve your goals. Remember, every great business starts with smart decisions about how to allocate resources. So, take the time to evaluate your options carefully, and don't be afraid to take calculated risks. That's it for today's Business with Louis. Be sure to like, share, and subscribe. And remember, every great business starts with action. Make your next move count.